Hey everyone, Les here from BG Trading and I hope you are well. Today is September 12, 2023 and I'll be analyzing most the technical aspects of three good quality companies which their stocks are trading at technically discounted price. All those three companies have been profitable for FY23 and most likely they will be profitable for FY24 as well. Those stocks are trading at technically discounted price not only for the short term but for the long term as well. I'm not gonna go into details regarding the fundamentals. I realize that most of people are not really interested on the fundamentals. So if you like the fundamentals, you can always take a look on our free Facebook community, which we normally share the stock analysis of some of the stocks that we are analyzing. Let's have a look. I just want to remind this is not a financial advice, it's just from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we chase stocks for 20 to 40% using BGS 20 strategy. Okay. I also like to invite you to become a member of our free Facebook community. We call that Buy, Grow, and Sell Strategy for Share Traders. Details at the description below. Now, let's start with corporate travel management. So, in this analysis, we're not going to chase for 20%. Okay, the market at the moment, in the current conditions, the market is not really giving most of the stocks the secure, the safer opportunities, 20 to 40% return right now. There's a lot of uncertainty out there. Some countries may be going to recession. US maybe goes to recession. Australia maybe goes to recession. Although there are a lot of positives as well. But the market sentiment is not that good. So therefore, we are actually selecting those stocks which are reasonably safe companies to buy them, but only chase 18%. Let's talk about 18%, which is safer than chase 20%, potentially miss the sale and obviously not being able to lock a profit. So we're gonna aim for 18% of those three stocks. Starting with the corporate travel management. Okay, so first of all, if you look into FY23 results for CTD, which is the SX code, you see that the company has been profitable, $70 million profit, and strong increase of revenue. Okay, so the idea of the share price now has been coming down is because the market maybe believes the company won't be able to reach similar sort of revenue for and profitability for FY24. I think it could be in line to what has been in FY23. Still a lot of people traveling. That's a strong macroeconomic likelihood that we could still see corporate travel management in line with FY24 results, in line with FY23 results. Now, looking at the share price, and that's why we always buy at technically discounted price anyway, because we want to mitigate the risk, the potential further sell-off on the stock. Okay, so if we start drawing support and resistance for corporate travel management, we can see that the stock price now is sitting at what we call hypothetical support level, around $17.75. It's always a range. Remember, according to BGS 20 strategy, it's not a given value. It's always a range. You can range just $1 sometimes in a stock like this, so you just gotta make sure you understand that, because even if you buy now, the stock could even go down further, but still that be the hypothetical support range, and the same happens with the hypothetical resistance level, which in this case, if we use the same concept, would sort of set up the hypothetical resistance level around $21.20 to $21.50, giving or taking. Which brings us to the reason why we're doing this video, because we can, as you can see here, there's a trading range right here in a really good quality company that is trading towards the upside, but the volume is shrinking. As you can see, volume is shrinking. According to BGS20 strategy, volume is shrinking, stock falling, means that we could see a potential reversal. Sorry, my dog is just barked. Potential reversal just around the corner. But mostly important is value out there. And look, buying around this sort of level, I think, is reasonably safe. Obviously, if you need to protect the capital, we need to set up stop losses. So stop losses normally, if the target's about 20%, here I'll still, as I said before, I would target for 20%. But if the target is around, sorry, I would target for 18%. But if the target is about 20%, I would set up the stop loss no more than 10%. So 2-to-1 win-lose ratio. Okay, but it still gives a good opportunity to to see a bounce within the buying range. Heikin-Ashi candles are red, but the last one, as you can see here with really low volume, is sort of a pointing for a decrease in momentum towards the downside. We could see a potential reversal right there. Okay, so corporate travel management CTD is currently trading a technically discounted price for the long term, which is the pink line. So if you eventually interested to learn all the little aspects about the why we use the pink line and why we use the red line, so take a look on our online trading mastery course. We'll explain everything in detail. Technically discounted price for the short term, technically discounted price for the long term as well, and therefore is a buying opportunity. It's a good quality company. Next stock we want to take a look at is Coles, C-O-L. Another profitable company, as you can see right here. Again, like if you don't want to go to all through the fundamentals, just come here, take a look what's happening with the company. Obviously, I always wanted to see what's the outlook, but take a look what's happening in the company. Is the company profitable? Is the company does the company generate revenue? Does the company pay dividend? So Coles ticks all the boxes here. It's been more profitable in the last financial year than the year before, and also has increased its revenue. Okay, dividends also well increased through the last financial year. So fundamental aspect is it's pretty compelling. Again, this is a high level view. You need to go in deep. But from the technical perspective here, as you can see, Coles is showing a really good buying opportunity because it's trading at technically discounted price for the long-term and the short-term trend as well. The long-term trend is very consistent. It has been very consistent since 2020. Since beginning 2020, which for us, for the long-term chart, is what we call consolidation. It is a consolidation, and since its fundamentals has been also very consistent, as you can see here, consistent profit, consistent revenue, it's likely increasing year on year, but it makes us believe that buying at the bottom of the channel, it's a very like a no-brainer buying opportunity here. So if you look into the Heikin-Ashi, which is also one of our indicators, you can see there is a green candle right on the Heikin-Ashi, which is the first signs of a reversal. Then we will have the second sign of reversal once the candle crosses the yellow line, which is just enhancing here the color. Okay, once the candle crosses the yellow line and start trading above the yellow line, as it's trading here and right there, that's the second confirmation, and they just hold the stock. Okay, at the moment, Coles offer a very good opportunity to buy with a very tight stop loss. So essentially, you can aim for 16% in this range here, 16%, and setting up a stop loss right under the hypothetical support level. Again, this is not a financial advice. We're just sharing with you how we look this chart formation using BGS20 strategy, how we would be trading there. Although it is not within the 20 to 40% range. Again, I want to just remind this market has been very, very choppy. A lot of volatility. It's not moving in a clear direction, just sideways. And that's when you need to look into better quality companies. Stop looking to the small caps that are just falling daily on a daily basis. Most of the small caps is falling at the moment. And look into good quality companies. Make safer trades. Proper investment decision. Okay, this is calls. Potential reversal right here as we speak. So definitely for me is a buy, but only chasing about 16% on that particular position. Now let's move to the last one, which is a Fortescue, which the SX code is FMG. This is one of the leading iron ore producers. Again, I even put a target here because, look, again, it's not within the trading range that we ideally like to, 20% plus, but it gives us a 17% opportunity here with a very tight stop loss right there. Company also very profitable, pays dividend, really good dividend. Obviously, with iron ore prices down, the profitability has shrinked a little bit, but still, it's one of the leading stocks. The market loves it, and should China rebound from turmoil situation, we will definitely see iron ore prices moving up again. And if I was going to buy Fortescue to trade within this upper level range, then this would be the level to buy for 17% profit trade. So that would be the range, and I would be setting the stop loss just under this hypothetical support level, just in case the stock falls towards to $15 hypothetical support. So we still can sell around $18.50 and buy back around $15 a share. I think the pressure here is towards the upside. Fortescue offering a very good fundamental and technically opportunity right here around this under $20 a share. Green candle on the Heikenach right here. Trading a technically discounted price for the long and for the short term. Guys, let us know what you think about those three stocks that we have just discussed in this video. This is a much shorter video. We try and go direct to the point for you to add value. I know that time is valuable, so I try getting to this direct to the information that matters to our viewers here on our YouTube channel. Thank you very much for watching to the end. I'll see you in the next video.